Hello, welcome all. So in the last session, we have discussed about the real and physical asset and financial asset in detail. So this is just the recap. So real assets are the in the form of land, right? Buildings, apartment, and many more things that are considered under the real estate. Real estates are residential land, building, apartments, farm, and the other hand, we have tangible assets that are gold, silver, platinum, precious stones like diamond, color stones, and tricks. Right. So next is the financial asset and tangible. Right. In the real asset, we have learned about the intangible asset, but tangible asset. Sorry, this is a tangible asset. But the financial asset is an intangible asset that derives value because of a contract claim. Like example, stock, bonds, bank deposits, share certificates. Characteristics of investment return. All investments are categorized by the expectation of a return. In fact, investments are made with the primary objective of deriving a return. The return may be received in form of yield plus capital appreciation. The difference between the sale price and the purchase price is a capital appreciation. The dividend or interest received from the investment is the yield. Okay. So you might have heard about the yield return. So the yield is nothing but a dividend or interest which is received on the investment. So different types of investment promises different rate of return. The return form and investment depends upon the nature of investment, the maturity period, and a host of other factors. So this is the first characteristics of investment. The second one is the risk. Risk is inherent in any investment. The risk may relate to loss of capital, delay in repayment of capital, non-payment of interest, that is the NPA, non-performing assets, or variability of returns. While some investments like government securities and bank deposits are almost riskless. Why? Because bank deposits, you will get the fixed return, you will have a fixed maturity time period and everything, right? So end of the 5 years, 7 years, 10 years, you will receive the fixed amount, you will receive the fixed interest rate. So there is no risk. Yes, in the same applied in the government securities as well. Government also offering the bonds, which are the riskless. Others are more risky. The risk of an investment depends on the following factor. So the first one is the longer of the maturity period, the longer is the risk. The lower is the credit worthiness of the borrower, the higher is the risk. The risk varies with the nature of investment. Where you will invest depends on that. Yeah, the risks will derived. Investments in ownership securities like equity shares carry higher risk compared to investment in debt instrument like debenture and bonds. So if one want to invest in the equity shares, then he may carry the higher risk and he will receive the higher return as well. But if you want some profit, some interest on your capital, then you should invest in the debt fund, debt instrument like debenture and bonds. Right. The third characteristics of investment is the liquidity. An investment which is easily sellable or marketable without a loss of money and without a loss of time is said to the possess liquidity. Some investments like company deposits, bank deposits, post office deposits, NSC, NSS, etc. are not marketable. Some investment instrument like preference shares, debentures are marketable, but there are no buyers in many cases. Hence, the companies listed on stock exchange are easily marketable through the stock exchange. So liquidity should be there if you are holding any stock or if you have invested in any bank deposits or somewhere else. If you want to sell that, if you want to close that your position, then there should be one buyer, right? So this is how liquidity works. An investor generally prefers liquidity for his investment, safety of his funds, and a good return with minimum risks or maximization of risks and maximization of a return. Safety. The fourth characteristics of investment. The safety of an investment implies the certainty of a return of a capital without loss of money or time. Safety is another feature which an investor desire for his investment. Every investor expect to get back his capital on maturity without loss and without delay. This is the one of the most important characteristics of investment, that is safety. The last one characteristics of investment is the contribution to capital formation. Capital formation increases investment which efforts economic development in two ways. First, it increases the per capita income and enhances the purchasing power which in turn creates more effective demand. And secondly, investment leads to an increase in production. So in this way, by the capital formation, economic activities can be expanded in underdeveloped countries, which is in fact has to get rid of poverty and the attain economic development in the economic. So this is the one characteristics which can change the poverty of investors, right? So next, objectives of investment. So basic, we have a basic four objectives: maximization of return, maximization of risk, tax minimization, and liquidity. Almost 3 points we have discussed in under the characteristics of investment. So we have objectives as well, right? So let's start with the return. Return, we can see income as well. In the simple word, in the financial word, return is nothing but an income, which investor is getting by the investments, from the investment he has done in the past. So, investors who focus on income may buy some of the same fixed income assets that are described above, but their priorities shift towards the income. They are looking for assets that guarantee a steady income supplement, and to get there, they may accept a bit more risk. This is often the priority of retirees who want to generate a stable source of income while keeping up with inflation. Government and corporate bonds may be in the mix, and an income investor may go beyond the safest AAA rated choices and will go longer short term deposits. Risk. Risks, we have a simple word for the risks is the safety as well. Safety and risks both are the different word altogether. Right. So the risks are similar to those government bonds. You will have to imagine IBM and Costco ongoing it was going bankrupt in order to worry about the losing money investing in their bond. So governments are offering AAA plus bonds, AAA plus securities to the people, to the investors who don't want to take a more risk, so they can opt for the minimum risk funds, right? So third objective is the tax minimization. Actually, this is the secondary objective. The safety, income, capital gains are the big three objectives of investing, but there are others that should be kept in mind when they choose investment. Tax minimization. Some investors pursue tax minimization as a factor in their choices. A highly paid executive, for example, may seek investments with favorable tax treatment to lessen the overall income tax burden. Contributing to an individual retirement account or any other tax advantageous retirement plan is a highly effective tax minimization strategy for all of us. Liquidity Liquidity investments such as bonds or bond funds are relatively liquid, meaning that they can in many cases be converted into cash quickly, and with the little risk of loss. Stocks are less liquid since they can be sold easily, but selling at the wrong time can cause a serious loss. So many other investments are illiquid, like real estate, right? In the real estate, if you want to sell your property, then you need to wait for 2 to 6 months till the time when you will get the new buyer, right? So real estates and art can be excellent investments. unless you are forced to sell them at a wrong time. The fact is, the safest investments are found in the money market. They include T-bills, treasury bills, deposits, commercial papers, bank slips, and other safe investments include highly rated government and corporate bonds. Speculation. Speculation is buying and selling of securities within a very short period of a time, so less than a 1 year. Speculator and need capital. Speculative capital includes those funds earmarked by an investor for the sole purpose of speculation, which means that those funds are earmarked for a high risk and high reward investment. This capital is often associated with the extreme volatility and the high probability of loss. Most speculators have short-term investment horizons and often use high degrees of leverage in their effort to obtain profits. So speculation is nothing but the buying and selling the securities within the short period of time. That means it should be less than 1 year, and speculators are doing this for getting a more profit with the higher risk, right? And they are just looking for the capital gain only. Let's example a person who buys security at 9 o'clock and sell at 9:30 for a quick gain, right? If timing is wrong, then it will the person will be facing the loss. If timing is good, then he will be in profit. So we have some key takeaways as well for the speculative. Just wait a time for 1 minute. Okay, we will continue here. We have some key takeaways. Speculative capital is categorized by funds set aside for higher risks but potentially high reward speculative investment. This capital is therefore often associated with the extreme volatility and a higher possibility of loss if timing is wrong. And the since on two investors are identically when it comes to risk tolerance and financial goals, designating certain portions of a capital speculative will vary widely across investor types. Next, investments versus speculation. So we had to differentiate the investment and speculation. So investment with the basis of risks assume the investment can be done with the low risks and high risks. In the speculation, investment is always high. So investment can be done with the low risk to high risk, but in the speculation, the investor or the person will be facing the high risk. Objective of the investment is the regular return with the capital gain, and in the speculation, objective is the only capital gain with the high risk. Investment can be done with the long-term period horizon, but the speculation is done with the always short-term view. Investment is done on the own fund, right? But while speculation, the person can use the margin. He can borrow the funds to the supplement his own fund. So nature of return in investment is consistent and the long term. So it will help to gain your capital with the regular return. But in the speculation, nature of return is the quick and the short term. Gambling. Gambling means taking high risks or not only for the high return but also for a thrill and excitement. Right? Gambling is the unscientific and the unplanned. So where analysis in the executions in the stock market in the investment is done unplanned, right? Based on tips and rumors, gambling is done. Example: horse race, lotteries, and games. In the lotteries and card games, we have seen the gambling only. Gambling is done in horse races as well. So investment, gambling. Let's have a differentiation between the investment and gambling here. So on the basis of nature, risk, return, motive, period, and action. So investment, the nature of the investment is a carefully planned and scientific, right? So, yeah, investment is done. Everyone is doing the plan, well planned investment is done. Gambling is unplanned and unscientific that we had discussed in previous slide. The risks match with the return. With the low risk, return can be higher in the investment. In the gambling, there is a higher risk and a higher return. Taking higher risk for the higher return. The motive of the investment is the for the regular income and the capital gain, right? The motive of the gambling is just the thrill and the excitement. The period of the investment is the long term. The gambling is done for the very short term, that can be for the 1 hour, 2 hour, or the on the daily for. And the action of the investment is a detailed analysis. So while doing the investment, the person is doing the analysis, detailed analysis, that is the action. And the gambling is done on the basis of tips and rumors, right? So in the next slide, we will discuss the next topic, that is the individual investors and institutional investor. Thank you. Best wishes.